Welcome to another episode on the Money Mastery platform with Peter Asare Nyarko. Today, we are looking at 7 simple steps on how to create a simple budget. Budgeting is important and it is vital for every individual to create one. And so in this video, we are going to look at 7 ways, simple ways you can actually create your personal budget. If you are hoping to gain more control over your spending and begin working towards your financial goals, you need a budget. A personal budget or a household budget is an itemized summary of expected income and expenses for a defined period of time, typically 1 month. And so mostly budget, if you are creating budget, it focuses on a month. So now let's look at what a budget does. As a financial planning tool, written monthly budget allows you to plan for how you will spend and save your money each month and also keep track of your spending patterns. Though making a budget may not sound like the most exciting activity, and for some, it's downright scary. So most people do not want to create a budget because they see it as a scary activity. It scares them. And so it is vital to keep your financial house in order, as budgets rely on balance. If you spend less in one area, you can spend more in another, or choose to save that money for a larger future purchase, buying a rainy day fund, or even for retirement. And so now let's after saying all this, let's look at how can you create a budget in 7 simple steps. 1, gather every financial statement you can. Every financial statement you can. This includes bank statements, investment accounts, recent utility bills, and any information regarding a source of income or expense. So every financial statement, every finances you have engaged in, you need to gather all this because we need this to create our budget. One of the keys in the budget making process is to create a monthly average. So the more information you can dig up, the better. So what we want to do is we want to create a monthly average. And so we need as much information as possible. So gather all your financial information. The food you bought last month, you can raise that. Bills, the utilities you have paid over time, your bank statement, your policies, every information we need it to make sure we create a budget. Now, after gathering all your information, step number 2, record all of your sources of income. So you need to take a record of all your income sources. If you are self-employed or have any outside sources of income, be sure to record this as well. If your income is in the form of a regular paycheck where taxes are automatically deducted, then using the net income or take-home pay amount is fine. And so you need to use the net income or take-home pay if you earn a monthly income. And then record this total income as monthly amount. So you need to, all the income you receive from day 1 to day 30, record everything and then know the total. Now let's go to step 3. Create a list of your monthly expenses. Create a list of your monthly expenses. So write down a list of all the expected expenses you plan on incurring over the course of a month. So all the expenses you plan to incur, you need to list them. This includes car payments, if you have to make a car payment, insurance, groceries, utilities, entertainment, dry cleaning, loans, college savings, especially everything you spend money on. So everything that you spend money on, if you are paying for a car loan, you need to know how much you pay every month. The money you spend on groceries, the money you spend on entertainment, your DSTV, your gym subscription, your transport, your fuel, list every amount. Now let's go to step 4. Break expenses into 2 categories: fixed and variable. Fixed and variable. In other words, essential and non-essential. Fixed expenses are those that stay relatively the same each month and are required part of your way of living. So these are expenses that stay the same and you need them so your life will move on. They include expenses such as your rent, your car payment, cable or internet service, trash pickup, yes, and so on. Your groceries, your utilities, they are fixed. These expenses, for the most part, are essential yet not likely to change in the budget. So they are essential and they are not likely to change. So you need to know them. Now let's look at variable expenses. Variable expenses are the type that will change from month to month and includes items such as entertainment, eating out, gasoline, gifts. So this expenses, they change over time. This month you can buy gas for, let's say, 500 Ghana cedis, and then the following month, because you bought 500 in month 1, the following month you may not necessarily need to buy additional gas. So that brings the figure to 0. And so they change with time. This category will be important when making adjustments. Yes, so when making adjustments. So because you bought 500 cedis in, let's say, January, in February you can decide to say, I have enough gas, so I only buy, let's say, 100 cedis to top up. So in this case, you have cut down your gas expenses from 500 to 100 cedis. Very important. So you need to break your expenses into 2 categories, fixed and variable, and then know each item that falls under each of these categories. Now, point number 5, total your monthly income and monthly expenses. You need to total your monthly income and your monthly expenses. If your end results show more income than expenditure or expenses, you are off to a good start. Let me take this again. If your end results, after totaling your monthly income and your monthly expenses, if your total results shows more income than expenses, you are off to a good start. This means you can prioritize this excess to areas of your budget such as retirement savings or paying more on debts to eliminate that debt faster. So if your income is more than your expenditure, you can then prioritize paying off debt or saving more on retirement. So the excess money, you can push that into your savings account, or you can push that into paying down your debt. If you are showing a higher expense column than income, it means some changes will have to be made. And so if your expenses is higher than your income, then you need to go back to your budget and make sure you make some changes. Yes, maybe you may have to cut down on entertainment. Maybe you don't need to subscribe to DSTV. You need to just buy an antenna and watch TV, 3G TV and all those free to air channels. Yes, so it's very important to total your monthly income and your monthly expenditure so you can make some changes. Now let's look at point number 6. Make adjustment to your expenses. You need to make adjustments. If you have accurately identified and listed all of your expenses, the ultimate goal will be to have your income and your expenditure column to be equal. The ultimate goal is to make sure your income and your expenditure is equal. But for me, I tell people your income should always be more than your expenditure. And so even though the ultimate goal is to have equal balance, I think your income should be more than your expenditure. Yes. This means all of your income is accounted for and budgeted for a specific expense or saving goal. If you are in a situation where expenditure is higher than income, you should look at your variable expenses to find areas to cut. And so if you do your budget after doing your budget and you know your expenditure is more than your income, then go back to your budget. Look at your variable expenses. Try as much as possible to cut down on some of those expenses. Like I said, entertainment, you can choose to cut down on entertainment. Gasoline, you can choose to cut down on gasoline. Even dining out, you can choose to cut down on dining out. Gym subscription, you can decide, I will gym at home. I don't need to pay gym subscription every month. I can gym at home. Yes, so it's important to do that. Since these expenses are typically non-essential, it should be easy to cut few cedis in a few areas to bring you closer to your income. Yes, since they are not essential, you can do away with them. So you can decide to cut some expenses out of them. For example, you might get rid of a gym membership or cut back on eating out as often. So because your expenses is more than your income, you can decide to, let me get rid of my gym membership so I can balance my budget. Very important. Now, after doing that, after making adjustment to your expenses, the last step you need to do is to review your monthly budget. It is important to review your budget on a regular basis to make sure you are staying on track. Reviewing your budget is important to make sure you are staying on track. So you need to do that every month. After the first month, take a minute to sit down and compare the actual expenses versus what you have created in the budget. This will show you where you did well and where you may need to improve. So every month, sit down. I said I was going to spend 500 Ghana cedis on groceries. Was I able to do that? Did I stick to that? So you assess your decisions. So the actual and with what you stated to see if you are on track. If you are not on track, maybe you may need to do adjustments. You may need to improve on certain things. And so in creating a budget, the 7 simple steps, let me just touch on them again. Gather every financial information or every financial statement you have. Record all of your income sources. Create a list of your monthly expenses. Break expenses into fixed and variable expenses. And then total your monthly income and your monthly expenses. And then make adjustments to your expenses. And then the last thing you need to do is to review your monthly budget. And so, this is an easy way to create a budget. So right from watching this video, go and have a meeting with yourself. Pick a pen, pick a sheet, or you can even open a spreadsheet on your computer, on your laptop, and then go through the process as I expanded on them. Make sure you subscribe to this channel. Make sure you like the video. Make sure you share with others. And drop a comment at the comment section. Let us know what we are doing well and what we need to improve. Because this is for you. Always remember, the goal isn't more money, but financial independence and financial freedom. Looking forward to seeing you in the next episode. Thank you.